Okay, let's start the panel. So I'm Radu State. For those who don't know me, I'm a professor at University of Luxembourg and also at Interdisciplinary Center of Security, Reliability and Trust. And it's my pleasure to be here and honored to introduce our 4 panelists for our panel this afternoon. So I'll start from, well, some of the panelists you have already met them already this morning. So we have a panel oriented on token-based economy, tokenization and blockchains. And we are very, very pleased to have Sachiko from IBM, and I'd like you to introduce her. Then Ziyuan, Henry, and Christian. So the way we will move ahead is I would like each of the panelists to basically give a very short introduction to the topic and that they would like to address and discuss. What I would like you, all of you, to do is once we start the panel is really to engage with them and ask the questions related to things like token-based economy, smart contracts, and maybe all of the things that you have seen during the 3 talks that the 3 out of the 4 panelists already gave these days. So let's start now with Sachiko, if you want to. Please come and I'll give you the mic. You want to
like sit here
afterwards we'll do the chair.
Okay. Hi, my name is Sachiko Yoshihama. I'm from IBM Research Tokyo. So this morning I had an opportunity to give a keynote speech and talk about the industrial blockchain activities that IBM is pursuing and its technical challenges and the some of the things that we are working on in IBM Research. So the am I supposed to make a comment about token or? Yes. Okay. Yeah. Sorry.
We did it once in yeah, I went to question for them when they all
Okay. So this morning I talked mainly about the supply chain and logistics type of the use case on the industrial uses. But we are also very interested in the token economy as a kind of promising use case of the blockchain, not only the public blockchain, but also in the permission blockchain space too. Okay. Yeah. So the in the there are many interesting use cases of tokens. So I really
okay.
Is it okay to go through the?
Yeah, well, no, I will just go to introduce yourself.
Oh, just introduce. Oh, okay. Then let me stop here. Sorry.
Okay, much better. So I'm talking about the digital innovation platform the blockchain lab is located in. So other topics including AI, cybersecurity, data analytics, and IoT. So the purpose of the platform is to accelerate the outcome of research from university into the real-world application to support the different industries like supply chain, healthcare, or financial services. And on the first day, I gave a tutorial that focused on blockchain's application in financial services and also some other projects we worked around art market, around the work with regulators on anti-money laundering and know your customer. Also some research topic into interoperability among the permissioned and permissionless blockchain systems. Happy to be in the panel and discuss all the topics with you. Thank you.
Thank you.
Good afternoon. My name is Henry Lee. First off, welcome to Seoul. So, just a short introduction about myself, I guess. So, I'm actually from a company called Icon Loop. We first started our company back in 2016, but our initial engineers started research and development from 2015. Just studying original Bitcoin white paper and some variant implementation of the original Bitcoin and blockchain technologies. And initially our aim was to provide enterprise-grade permission blockchain technologies to enterprises in Korea. Mainly financial institutions, banks, insurance companies, public institutions like government agencies, and some technology companies like Line, Samsung, SK. And in 2017, we were fortunate enough to have an opportunity to provide our proprietary technology to a public blockchain called Icon. Icon is a Swiss foundation, and it aims to create a permissionless public blockchain platform similar to the Ethereum network, where individuals can issue, deploy smart contracts, issue token, deploy smart contracts, and ultimately be interoperable with all those permission blockchains that we have implemented to Korean institutions mainly, and few overseas institutions as well. So I won't be focusing on the technology side of things, but probably focusing on sharing my experience for the past 3.5 years working in this space, just kind of sharing about the general industry landscape, what's kind of special about Korea, and kind of how our enterprises in Korea adapting the technologies. Thank you.
Hello. Yeah, so my name is Schaefer. I'm from Ericsson Research in Sweden, mainly doing security research, and have been interested in the past more in security policies, enforcement of those, and so on. Recently, I'm focusing on privacy technologies. I have been mainly looking in big data environments and how to protect personal data there. And in line of that work, I have also been looking into blockchains, basically trying to use blockchain to increase transparency towards the customer. So showing how personal data has been handled. And that line of work, it became a bit obvious for us that interoperability is an issue that we have. Also when I was looking at other projects that were done within Ericsson, for example, looking into roaming settlement using blockchains. And there it's quite important that you have somehow ways to work together between different types of blockchains. As if you look at this roaming settlement case, for example, not every operator might want to use the same or blockchain platform from one vendor. So it's very common in the telecom industry that you want to use equipment from different manufacturers. So from my point of view, interoperability is an interesting topic.
Please, at any moment in time, if you have questions, just feel free to drop in and ask them and engage also with the panelists. The first question I like, and it's for Henry. The conference, one of the topic is cryptocurrencies. We haven't talked too much about cryptocurrencies. We talked mostly about technology. And the specific topic of the panel is token-based economy. So I'm not sure how many people in the audience know what is a token and what are the type of tokens that we are dealing with. Not necessarily in terms of how smart contracts are programmed and all the standards about ERC, but really what type of tokens are there on the market, what are the difference between them, and how are these type of tokens, seen in Korea in terms of regulation? Would you like to comment a little bit?
Sure. That's a wider range of topics. I'll start briefly just explaining about, sharing my thoughts about tokens. So as you may or may not know, year 2017, that's the year when many more people realized and been introduced to this concept of token, such as Bitcoin, Ethereum. And 2018 was the year when the market actually have seen dramatic increase in the interest and the demand for these token. And there were whole industry discussions about what's utility tokens and what's the security tokens, and different token standards like non-fungible tokens being issued by different cryptocurrency projects. So just overall, I'm sure you guys have a great understanding about tokens, but there the two biggest token types, so to speak, I guess, would be the utility tokens and the security tokens. Utility tokens, as the name says, normally has a purpose, has a right to certain behaviors or certain so let's say like a membership tickets will be something similar to utility tokens, allowing you having a membership will allow you to access certain, let's say, golf clubs or research centers or restaurants. However, security tokens are similar to just plain old securities like stocks, which offers you an ownership of certain securities, assets. So there's a lot of talks about securitized tokens and tokenizing certain different asset classes like paintings could be also securitized. Certain ownerships of a real estate could be securitized and distributed to multiple individuals. And by me owning maybe 2 security tokens of a Picasso painting allows me to have a representation represents an ownership of that painting itself. So I think those two are the most popular token types that people in the industry talk about. And I guess, should I kind of go ahead and talk about ICOs and
Before moving to ICO, what is in Korea the regulatory point of view on these tokens? Are they accepted? What is basically the regulator telling to a company going and saying we are going to issue now security tokens? What are the due diligence things that need to be taken into account?
Sure, that's a very good question. Obviously, there's a lot of talks about regulating cryptocurrencies all over the world. Korean government also seems to be very, negative against token and issuance of tokens by enterprises. There are companies, even like SK, who are very much interested in engaging and starting, new business, in the realm of, tokens and different blockchain implementations. But, still the government stance is, no to ICOs, which are initial coin offerings, a way of issuing token and raising funds for the product to be built in the future. But in general, I think blockchain technologies, on the other hand, are very much promoted by the government. So there aren't clear regulations about tokens and coins in Korea. But even countries like Japan, the governments are starting to find ways to regulate these so-called tokens and coins. And the first step in doing that was obviously to regulate these cryptocurrency exchanges. There are, which are facilitating the exchange of these tokens between retail investors and individuals.
So in the talk about security tokens, you mentioned that they can represent ownership. Now, Korea specifically has not created any regulations or passed any laws to allow such tokens to represent ownership. It's not recognized by the courts or the government in any way. So do you know of any countries where that is true?
Not to my knowledge. There may have been attempts to, represent certain ownerships. However, I do not believe it's legally accepted. It may be possible to add certain terms and conditions to that specific contract that writes about certain ownership of certain assets, but I don't think it's widely accepted as legally viable.
So you're saying it could be a contractual obligation of the legal owner to share ownership with the token holders, but that's of dubious legal value in the real world.
Well, that's kind of where we are. But,
and utility tokens in general seem to convert, all the utility token purchase contracts seem to be written to largely grant precisely zero rights to the buyer.
What would you mean by zero rights to the buyer?
As a buyer of a utility token, you pretty much get nothing except possibly a right to some future, maybe kind of someday service.
Well, I think there's that's a good point. I think there's a very interesting story that I could share that is very specific to Korea. If you look at the real estate market in Korea, there was a CoinDesk article about this. By the way, in the Korean real estate, the construction companies of developers of a real estate can actually sell the right to the future ownership of the apartment that is planned to be built, and this is legally a product that is being widely sold, exchanged between householders in South Korea. So
that product has existed for 50 years.
That product has existed for maybe 30, 40 years. This product has just been introduced, I would say. So I'm not saying much hasn't built on these so-called public blockchains. There aren't that many applications that these so-called buyers have access to or have the right to access these applications. So right now, I certainly agree that it is debatable, it is controversial, and worth discussing. What the true value of these utility tokens are, and there are a lot of discussion, I'm sure.
There's a reason that they're called shitcoins.
I'm sure there are a lot of shit coins. I'm sure there are coins that truly wants to provide some value. We're very early in this industry, and I'm sure there are different opinions about what this technology can actually represent.
Let's stand with taxing. I mean, if you take utility token and security token, some people might say, let's buy a utility token. It probably might be less tax than security token, and then hope that the price will go up if it's not a stable kind of utility token, and then hide it like a kind of security token. Do you see something like that happening, or how we can deal with such things?
Yeah. So should I? Okay. So it's all me. Okay. We've actually talked to a number of different lawyers, not just in Korea, but in Singapore and in the United States. And there are a lot of attempts by different projects and the issuer of these cryptocurrencies to get legal opinions by these lawyers about whether this token is a security or a so-called utility tokens. And obviously, until there is an actual utility, the use of these tokens for any given platforms, yes, it's likely will be deemed rather closer to a securities than a simple utility. So, apart from very few cryptocurrency assets, maybe like Bitcoin or the Ethereum, there are a lot of discussions that kind of supports the assertion that right now still these utility tokens don't really have any utilities, and right now they should be deemed something similar to a security or something in that asset class. Does that kind of make sense?
Yeah, I want to comment about the distinction between the security tokens and the tokens that represent other kind of the assets, because security is a specific type of the asset that has a specific set of capable features and have a different set of the regulatory requirements, while tokens can be used to represent other type of the asset. So, for example, the pegged coins or the stable coins that are pegged to the fiat currency is also some kind of the asset-backed tokens that are representing the real-world value in the form of the tokens. There are other forms of the tokens that represent things like digital rights or the fixed asset like cars or houses, real estate. But they are not securities, and the securities law don't apply. So and if you digitally transact the securities, there is often much higher bars or more strict regulations in place. So, for example, in Japan, there are set of the very complicated laws to define how the digitized version of the securities has to be exchanged or recorded or kind of things, and that doesn't necessarily apply to the other type of the asset. Yeah. So, and for the security tokens, I believe that the SEC in the United States has announced that definition of the security token offering, and they placed several regulations for the exchanges of the security tokens, and to differentiate security tokens from the ICOs and to make it more safer to the investors. And I'm not sure if Japan has a similar law or in Korea, but probably the similar kind of the regulation will be placed in the other part of the world, I think.
You mentioned asset-based tokens. For me, I never understood the difference between, let's say, conceptual tokenizing, let's say, a house, or doing something that was done in the financial world many years ago, which is called basically securitization. Just as in securitization, normally you take an asset, you can divide it in kind of pieces, and then you have a different type of revenues based on the risk that you associate to each of the pieces. But at the end, you conceptually do the same thing. You take an asset and you cut it, and you give it to the investors. Do you see any difference conceptual between these two, or it's just the same ship but otherwise colored?
Yeah, if you're investing into the securitized real estate, then maybe they are the securitized security tokens. But my point is that they are, the tokens are not necessarily securities. They can be associated with the assets that are not securities. Yeah.
But you also mentioned stable coins. Mm-hmm. And you know that Tether, when there is a kind of stable coin. Mm-hmm. Tether, yeah. They said, okay, we are generating these tokens, and each of these coins is backed by some real fiat currency. And there were two problems with this solution, is that there was no way for an investor to verify that fiat currency really exists. How can you do it? I can say now I'm going to generate 2 million Radu coins, and they are backed, each of them, by €1, but I don't have these euros.
Yeah, so I agree that there are some problems. So typically, there is a custodian bank who reserve the amount of the fiat currency as a kind of deposit, and they issue the same amount of the coins or the stable coins into the blockchain network, so that these coins can be traded on the blockchain as a tokens or coins, but still there is a guarantee of the underlying the fiat currency. But you have to trust that custodian bank to do the right things, and there are the incidents that didn't happen, so that the trust on this custodian bank is important, but sometimes the trust is not satisfiable. Basically, I agree with you that there are problems.
And I have one more question also for you. So, also for all the panelists, is there something that we cannot tokenize? Because people now want to tokenize real estate. They want to tokenize fiat currency. They want, basically everybody wants to tokenize everything. I'm not sure if they will also generate money with it, I mean revenues, but are there some things that we cannot tokenize because ethical reasons or because simply it doesn't make sense?
I haven't thought of what shouldn't be, but I guess what good use cases of tokenization when it's in the sharing economy, like decentralized Uber or Airbnb, that you directly connect the seller and buyer in the market, so reduce the cost of the intermediaries. And also like social media, Facebook get hold of all your data and get monetized of individuals' data. Then the tokenized in this sense of data marketplace, so give individual control of their data and they can like better control of the personal data.
Yeah, well, I agree. I think the question is kind of wrong. Like, I don't think the question should be like, what do you think cannot be tokenized? Obviously, you know, that statement I don't think is true. There are unique use cases where tokenizing certain asset or the utility of certain application into token, you know, there are certain use cases that are useful, but it doesn't mean that you could tokenize and it will still have the same or similar level of value as the underlying asset that is being securitized or tokenized for that matter. So I think it's important, at least at this stage of this technology cycle and industry adoption, to look for good use cases and just not try to use this technology for everything, so to speak.
Right, so to sort of emphasize that point, rather than asking what should not be tokenized, if we say, how should we evaluate the efficacy of tokenizing something? And it really should come down to, okay, if you split up and diversify either the ownership or dividend shares, is this an asset which will have either capital appreciation or have future dividend or income earnings? If so, it may make sense to have shared ownership via tokenization. If not, it really doesn't make a whole lot of sense to tokenize the ownership.
I agree. So another part that is really necessary is how regulators actually see these tokenized assets. There needs to be a certain line of understanding as to how these assets should be perceived and should be understood throughout different jurisdictions, and it needs to be acceptable not just locally but on a broader scale in order for these values to be transferred and still holds the same amount of value. And I'm sure also the efficacy of these tokens, I'm sure having a right framework to understand these assets will help with defining and providing legitimacy, efficacy to these new implementation of blockchain technologies, I guess.
Well, and this answer then points out one of the real fundamental problems of securitization, which is that as a token, it's fundamentally borderless, which means it is very hard to pin down a responsible or effective regulator. And governments, regulatory agencies are very much afraid of assets which move cross-border so frictionlessly.
That's very true. That's a very good comment, I think. And I do share the need for more discussion on this matter. But I think if we were to reach a consensus as to how these should be treated, then I think that's where the true innovation can come, by providing frictionless, seamless transfer of value, data, whatever, peer-to-peer. I think that's where an innovation can actually happen. So right now everything's a little messy, but rather than trying to maybe use the technology to enable your business, maybe a better framework to think about this is how can we actually strip apart all these intermediaries and frictions, and how can we use this technology safely and ethically, and to provide these seamless services.
But if you think, if we had this conference about 2 years ago, probably we would have had a panel talking about ICO. And now, 2 years later, we know that ICOs, well, many of them were pure scam. So a lot of people burned money, and there's nothing. What can we learn from what happened in the ICOs when people try to generate tokens, and not to repeat them now when we are talking about security tokens, utility tokens, and are we going, if this conference, we'll have a panel again in 2 years to talk about the failures that we did with utility tokens and security tokens?
Sure, that's on me.
Yeah, so there was an ICO scams and the regulation placed, and there are the attacks to the cyber attacks to the cryptocurrency exchanges, and that are being now regulated. I think the lessons we learned is that the society is still not good enough to be anarchy. To be safe, so that we need some kind of regulation, we need some kind of control to protect the investors or the people from those kind of the scams. I think, unfortunately, that's the lessons learned so far.
But I would object to that because, well, who were the buyers in these ICOs who got scammed? These were people who owned Bitcoin and Ethereum, who were fundamentally bought into a trustless system, who fundamentally don't want government to protect them or oversee them. And if they lost money, tough shit, they lost money.
Maybe that's true. And I think that the other gentleman is also agreeing.
I sort of agree that ICOs might have caused some hassle. But it's us, it's human beings who just believe in 2 pages white papers being published in the web and say, well, this is the investment part. Remember what the Bitcoin specification tells. It's an experimental cryptocurrency. Whoever invests in experiments knows what he or she is doing. And the ICOs basically just bought into the fact that human beings once in a while are stupid. They try to make 1,000% gains within 1 day. And everybody who thinks about that's impossible to handle. But take it back to a sort of more concrete situation. Within Switzerland, the situation on regulation for ICOs was very clear, but with very wide margins. And everybody argued very clearly, if you would like to fund a stock-based company or any other company, you have to follow rules to attract investors. And ICOs didn't do that in many countries in the world. For whatever reason, they were not quick enough to make their regulations. In Switzerland, we didn't have that side of the problem. There were scams, obviously, but again, that was on the user level, not on the mechanism itself.
Yeah, also, I think the question could be rephrased and said, we have startups which fail. Why do startups fail? Why, with proper due diligence and very proper process of investing into startups, we still have very low success rate of startups? How can we fix that? Well, we can't fix that. There will be ICOs which will fail because they are either not well thought out or they just don't succeed. So it's just the nature of the investment that things will never work out 100%, no matter how much regulations you can put into it. So I don't think the lessons learned from ICOs are clear enough of what should be done next. I think nothing should be done next. We should just wait and look what is happening and whether people learn from their mistakes. As you said, those who invested lost their money, and that's it. They are fine with that.
I just want to add one point. Although ICO doesn't have this good reputation now, but from my my team, the art chain work we are working on, that's funded by one of these ICO, and this funding is larger than the combination of all other blockchain research funding combined. Certainly 80% may be scam, but I would say a small percentage of this ICO supports some good thing, good research and work.
Also, I think that, also I was thinking that like one thing that I think is very important is that we also need to avoid overregulation to the point that, for example, legally doing an ICO is as hard as getting your stock listed on the New York Stock Exchange. If it becomes, like, if regulation becomes that strict, then this severely limits the potential that this new tokenized economy can bring. If securitizing anything with a token is this very complicated thing that you need, you know, I don't know, $10,000, like $100,000 compliance budget for, and I think that can totally be a pitfall that regulators can fall in.
So to put some numbers to this earlier point, right? A typical early stage venture capital investor, if he's doing good, he gets a 10% hit rate. If he's doing great, he gets 20%. 80% fail, right? So, and that's an experienced team with due diligence that really, you know, vets the companies beforehand. So it's not unreasonable to assume that these unvetted ICO startups are going to have a failure rate, you know, their hit rate will be 1/10 of the VC rate. So you can expect 1 to 2% of them to do well, which means 98 or 99% are going to fail. And we can call those scams, or we can just call those, you know, naive failures. They're often the same thing.
But the problem with ICO is that there was no proper the process of you know, reporting the performance of the company or providing auditing, so that it was very easy to do the scam, not just a failure.
No, but the key word you use there is proper. So proper is in the eyes of the investor. If the investor chooses not to do such investigation and research, that's his choice. And this is sort of fundamentally at the core of a trustless technology, right? Is that there is no regulator at the center of this. There is no trusted parental party to take care and say, this is a good one. This one passes our test. You can have third parties that do such evaluations, and that type of market will develop. But frankly, in a trustless environment, it is up to that investor. It's absolutely buyer beware. And so if you didn't do your research and you invested in that company and you lose, you walk away. You're done.
Okay, I'm not an aggressive investor myself, and I actually agree with you that I don't care for those very aggressive investors to, you know, do gamble and fail. But the other important point is that, as she mentioned, this, you know, new type of the investment is creating a new opportunities for both investors and people who get invested, right? So if you are running a small company and wants to get funded, the traditional process takes a lot of time and effort to get investment. But this, you know, token-based maybe investment scheme can open up a new door for collecting the small amount of the, you know, the investment from the large number of the, you know, investors than before. And for the investors, this is also an you know, opportunity for start investing. In Japan, a lot of people keep money in the saving account, although the interest rate is very, you know, very, very low, and it doesn't mean almost exist. But the people are kind of you know, afraid of making investment because there could be risks and they don't know what the risk will be like. So if there is a safer investment environment that people can feel safe to start making investment, even at a small amount, that will be very, very good for them too. And then that there will be people who are benefited from this investment. So my point is that this new investment scheme is good if it can be safer for those ordinary beginner investors too.
I was also thinking that a voluntary regulation can also be a choice here. For example, if I am a risk-averse investor, I will simply avoid any ICOs that do not prove that a trusted third party audited their books, for example, and did this. But then I don't think there needs to be a regulation that mandates that every single ICO go through this process. It can simply be this sort of social norm that, if you don't want to gamble with your money, let's say you only invest in ICOs that, I don't know, some reputable financial services company has audited. I think that this is a much better solution than mandatory regulation like we have with the SEC with traditional stocks.
There were these terminologies like kimchi premium, like in 2018. A lot of the Korean people were on steroid, investing in a lot of these ICO projects, and obviously failed in the majority, in the most part. But another statistics, if you look at all the companies that are over 50 billion market capitalization, and if you look at the Series A investors of all those companies, only like 2% overlaps. He gave a great point about, the failure of startups. I don't think it was a problem of the fundraising mechanism itself. I think the problem was mainly about uneducated investors not knowing what they're investing in. And, they don't need to fully understand this project or the company or what this company will build in the future. I think, him or, he or she, sending Ether, sending Bitcoin to investing in a company, I think if he or she understands the level of risk that they're taking, I think that's the first step. I don't think there's a fundamentally wrong ICO itself. If you look at it, the mechanism itself is not that new. Or the problem was how the investors actually reacted to this whole introduction of a new fundraising mechanism. And obviously there needs to be a lot of lesson learned, and the market overreacted, and there are still a lot of hype behind and discussions and debate behind the true valuation of these tokens and cryptocurrency projects. But I think the most important thing is for people to be educated about what they're actually putting their money for, and being okay with losing all of their money if the project goes bust.
Well, I don't buy the premise that these investors are uneducated, right? You talk about the kimchi premium. So talking about Korea specifically, a lot of Koreans who invested in these ICOs, they were using this as a mechanism to bypass regulation, because in Korea it's really hard to invest money into a foreign project, into a foreign security. That's not easy.
Foreign securities meaning foreign companies.
Foreign companies. If I want to buy shares in a company in Singapore that's doing a startup, that's really hard.
Isn't that hard for U.S. citizens trying to invest in Singapore startups?
No.
No?
No.
How so?
No, because U.S. has no regulations on investments into foreign company securities. Korea does.
Is that common behavior?
Yes, it is common. I'm from Canada, and I can invest, in Japanese and Singapore stocks just by logging into my bank account. I think Korea has some extra regulations on this.
And so the whole kimchi premium is actually a self-inflicted wound, because Korea made it impossible for Koreans to send their cash to buy these coins on a foreign exchange. You could only buy them domestically, and so there was a lack of liquidity on the Korean exchanges. So foreigners would buy them on a foreign exchange, transfer the bitcoins to Korea, sell them in Korea at a premium.
You're talking about cryptocurrency projects.
Well, so you said the kimchi premium, and that was precisely about cryptocurrencies.
Right.
In late 2017, and that was entirely caused by Korea's foreign exchange regulations. And so Korea reacted very typically, and in March 2018 made a whole new set of rules that, you know, punished any foreigners who tried to trade here. They made it really difficult for foreigners to take advantage of that arbitrage, rather than opening it up for Koreans to actually trade globally. But the Koreans who invested in these ICOs, especially a lot of Korean companies did ICOs that were done from a foreign domiciled corporation. Mm-hmm. You know, the biggest one was actually a Hyundai Group company that has a Swiss corporation that did $250 million ICO. And it was all Bitcoin, and it was mostly Koreans investing. So, you know, what's really going on there is that people were using the borderless nature of these cryptocurrencies to be able to invest in a foreign ICO.
I think people were uneducated about what they're putting, you know, where they're putting their money.
Oh,
I think that was
are people stupid investors? Absolutely, they are.
I do agree. I do agree.
But is it the job of regulators to take care of them and let them, you know, protect them from their own stupidity? This is really what a lot of this stuff comes down to, is regulators at some level, yeah, they want to protect their people from scams, but it's really not their job to protect them from being stupid. And this is always the dilemma of regulators. And it's much more parental in Korea and in Japan compared to the US. The US says, no, sorry, you're all allowed to be stupid.
True.
Except for Elizabeth Warren. And sorry, I'm just going off on weird tangents here. I'll be talking tomorrow.
So in economics, the sort of classic original bubble is the tulip bubble in the basically Renaissance Amsterdam. So at the time, the invention of financial futures and stocks in basically tulip bulbs caused a phenomenal bubble where prices went through the roof and then eventually crashed and people became sort of disillusioned. To my knowledge, today the flower bulb market is fairly unregulated. People seem to have learned from their mistake without us making rules that all flower bulbs must be purchased under these circumstances. Have we learned from our ICO crash of the last 2 years, or do investors need not necessarily everywhere to be a safe space, but maybe investors need some kind of a safe stamp of, we've looked at this and it's legit?
So Tether invited auditors, and auditors came and asked, and when they asked the real questions, Tether said, hey, I'm not going to give you the answers, right? And essentially the auditors pulled out because Tether was not providing the level of transparency that they wanted to. And it's the same thing happening, and actually Tether, just like 4 or 5 weeks ago, they came out, they said, hey, it's not one-to-one, but we use fractional reserve, and you're using also loans to back it up, and you know, it's a laughing stock, like, and everybody knew that. But I mean, the same problem happens with the exchanges. There's no published data. You just said that the foundation is based in Switzerland. A lot of foundations are based in Singapore. There's a significant amount of foundations based on Cayman Islands, based on Virgin Islands, and any other exotic, you know, that makes the Queen of England at Panama looks like a Virgin Mary again. So there's a lot of issues involved, and the problem is that regulations cannot match between countries, and there's a lot of opportunities missed in one country and, you know, gained in other countries. So I don't know how this is going to be solved, but.
So I think you do not have to regulate crypto assets just to protect people from stupidity and invest in something that's worth nothing, because you could do this before crypto. You can just bundle up some real estate loans and sell them to people and then find out in 2008 that they are worth nothing. I think the issue is, with ICOs is that it's different when you're in venture capital investor, you buy, for example, like 20% in a company that's hopefully the next Google, but you get also a say what happens with the money, you get a say what happens next, you get proper reporting. When you buy an ICO, you have zero say what's going on in the company, you have zero say what they can do with the money, what they can't do with the money, you have no control what's going on.
I don't have no control when I buy Intel share or IBM share or any kind of good, unless I have preferred shares, right? And my name is Warren Buffett.
Yeah, if you buy enough, you have a say. Yeah, but grandma can still do it. I can go to my bank, buy a leveraged asset with a leverage of 1,000, and the stock drops by 0.1%, and I'm.
Frankly, grandma losing her savings, that was a huge part of this.
Yeah, but this is we're gonna have the panel tomorrow, and possibly we should let the people also talk at some point.
Yeah. Yeah. Can I go now? Yeah. Yeah.
I tear myself off.
Yeah. Thank you. Yeah. I wonder whether my question will cool down this atmosphere or heat it up even further. I'm not sure, but in my opinion, this seems to be a digression. So, yeah. So, lots of people saying some people say regulation is needed. Some people say it is free for all. Just go ahead yourself, and you take the risk and you take the profit, whatever. So, but this gentleman mentioned the tulip bubble. It's like this ICO and cryptocurrency investment. To me, it seems like as big a change as like a tulip bubble, South Sea bubble, Mississippi, whatever those things. Like because it's something nobody has experienced. So. As in those previous cases, this is also a very risky business, and in my opinion, it's like so all this cryptocurrency, this blockchain society, those insiders should be well aware of the nature of this riskiness. But I don't think as a society whole we have not been that diligent in alerting those potential investors about the riskiness of this new type of investment. So, I mean, the individual ICO companies could, for them, the profit should be the most important thing. So they have no incentive to warn them. But as a society, the society as well, I don't think we have been very diligent about letting people know about the pros and cons of this thing. So if things goes well, we will get the credit. But if things don't go well, I don't think we were that, let's say, modest or humble enough to take the downside. How do I say this? To take responsibility for going down as well. So what do you think about that?
I take this one because about protection of the investor. I know a case which happened in Luxembourg. So the Luxembourgish regulator was basically they got an alert from the French regulator that an ICO that basically some people tried to do an ICO in France and they were forbidden because it was a scam. They were running the ICO, and on their website you could clearly see we are authorized by the Luxembourgish regulator, CSSF. And obviously what the Luxembourgish regulator said, okay, on their website they just put a small notice like, we are not endorsing this ICO, but legally it was very difficult for them to go against that website, which was in one of these islands, I think in the Cayman Islands, and to convince the guys who were running the ICOs not to put on their website that they are basically endorsed by the Luxembourgish regulator. So if you are an investor and you see, okay, there's an ICO and one of the most conservative regulator in Europe, which is the Luxembourgish regulator, is supporting it, you will put money into it. And I know people who said, oh, okay, well, let's put 50 euros because it's a safe investment. The Luxembourgish regulator will stand for it. So how do you deal with this kind of fraud which is not about stupidity of the people. People will believe, it's said on the website.
It's been critical. I want to remind everybody in this room, and importantly those people outside this room that have the regulation, that for like many years IPOs, Goldman Sachs, JP Morgan, all those guys, underwriters, they were like pumping IPOs in the 1990s, buying the shares for cents and selling them for like $10 and $20 and $30, and that was legalized crime. And who went into jail? Nobody. I mean, they're still doing it, to be honest, right? And it's who's protecting the investor over there, and how much money. And people speak about we have to consider something like the complete cryptocurrency market was like $750 billion at the heyday in January of 2018, and now it's like 300 billion, 280. And this is like nothing. I mean, Dow Jones is like $27 trillion alone, right? And the markets, we put Frankfurt, Toronto, London, Hong Kong, Tokyo, we're talking about $200-300 trillion. And those markets going down, like Nikkei in the early 90s was like 35,000 points. It went down to like 6,000 points. Who went to jail in Japan? Nobody. Like Dow Jones was like 12,000 went down to 6,500. Who went to jail? Nobody. Today it's again at 26,000. So in ICOs, it's not something that we don't see every time at Wall Street, right?
Yeah. So the punishment is for the purpose of the protecting the investors, right? Eventually. Yeah. And back to your point, you are saying that the cryptocurrency market is still much smaller than compared to the real-world securities market, which is true today. But I think the trend is this new type of the market is growing, right? And so that there is a much more growing risk for the investors to. So, and I think it is important for the academia to study and tell the truth about the risks and the situation about those new type of the market, and then make recommendations or suggestions about how we can improve this society. Right? Yeah.
Isn't the core problem of this is that human nature is greedy? Greediness of human nature.
Greedy is a human nature, but what differentiates human from animals is that we are rational and can be kind to each other. Right? Yeah.
Also, would need to take into account that part of the reason that altcoins went very high was because of the outflows of money, especially from China in the last 2 years. And Chinese government doesn't want, because I do work, doesn't want to acknowledge it, but it's very obvious. There was a lot of money that flew out of China and from jurisdictions, right? But
is that for investment purpose or for the lack of the trust in the Chinese yuan?
Before, you need to have somebody very close friends with the Hong Kong banks if you want to get your money from China outside of China, or Macau and so forth. Like, let's be real, right? Now with the Bitcoin, it makes it so much easier to get your money outside.
Yeah. And I think it's also heavily used for the money laundering and so on. Yeah.
I was very scared to break the flow. This can be a basic question since I'm not an expert for blockchain. So, according to my knowledge, we talk about government regulations or stupidity of the human being, since for public blockchain like Bitcoin or Ethereum, since those public blockchains are directly connected to the real money, cryptocurrency. So then my question is that is the issue like government regulation also exist for private blockchains like Hyperledger Fabric or not?
So I couldn't get the question. Yeah, sure. So for example, as I mentioned that there is a heavy regulation on the digitized securities recording and transactions, and even in the permissioned blockchain, the same regulations apply. Yeah.
Yes, please. We talked about regulation and different types of tokens, and so tokens also enables new mechanisms. For example, with decentralized autonomous organization, do you think they should be regulated the same as other companies, or be a different case for regulators?
So if the token represents the real world asset, like securities, fixed asset, and so on, in the current law, those tokens should be regulated in the associated assets law. And for the new type of the tokens, such as utility tokens, I think that's a good question. My position is that there should be some kind of the protections in place at the level that doesn't prohibit the freedom of creating new business model and so on.
Exactly. If it's a distributed organization which doesn't have a foundation, it's just a collection of random investors who created something. For example, the IE is trying to decentralize the pegged currency, and there will be potentially nobody really legally responsible for it. How regulation is going to work?
Well, I think that's a very good question, and honestly, I don't think any of us here has a good answer for it. But decentralized autonomous organization, it definitely is something that we're looking into deeply internally within our organizations. And what we're starting to discuss are what is actually required to maintain a decentralized autonomous organizations. Like, how would you manage shareholdings, like cap table management? How can you create a cap table management tools for a future DAO type of institutions? Does it actually? You back? Yeah. So I'm sure the regulators are looking into it, having their own opinions. I'm sure they're scared to a certain extent. But I do see a value in creating business from a decentralized autonomous organization type of structure, where you have more freedom and where you have less frictions and less procedural steps that is required in setting up new entities, introducing new products. It's definitely a very sensitive topic. I agree. But I think it's an excellent topic for any comments about DAO. It's certainly one of our key interest topics within our organizations.
Could I share something first? I'm Wendy. Actually, I'm from Singapore, and just wanted to share something further that Singapore has already developed. I know that there's a lot of negativity in the room just now. In fact, there will be a lot of news that is going to be launched in the Singapore space very soon. I think there's a new term called STO. I'm not sure if you guys are familiar with that. So from the wave of ICO is the wave of IEO, and next is actually STO. And in fact, the National Exchange, which is the Singapore Exchange itself, they basically has already invested in STO Exchange. It's the first in the whole world where the government and all that are involved, including the Monetary Authority of Singapore as well, which is MAS. And besides that, actually, the government has been doing a lot of things, like Enterprise Singapore, which is equivalent to almost like the Ministry of Trade of Korea as well. There's actually standardization that's rolling out, similar like ISO standard, but it's called SDO, Standard Development Organizations, that is only purely for blockchain. So there's a lot of things that's being done there because our company actually roll out a lot of government stuff. We are the first agency that is appointed by the government to do blockchain education and is regulated under the Ministry of Education of Singapore. So I think things are pretty much changing, especially in the Southeast Asia world. So let's stay positive towards the new bull market, right? Of the coins and all that and tokens. Yeah, thank you.
So to the question about DAO, or sometimes called DAC, the Distributed Autonomous Corporation. So I've set up a couple of them in the last year that are operating entities now. The question about a cap table. It's not a cap table. The ownership is directly by the token holders. That's it. So whoever's a token holder is, has a share of ownership. In the way we've set them all up is that we have a system of custodians who are elected by the membership, so that there is no board of directors per se. There's a custodial board which is elected sort of daily. It's an ongoing rolling election, and so the membership can change there quite easily. Those members are vote for proposals via multiple signature contracts on the blockchain. They make spending decisions and give some limited executive authority to people, again, through multi-sig contracts on the blockchain. So this type of organization exists. It's a legal entity. The two that we've set up are actually domiciled in Antilles. There was a certain flexibility there. And they're designed to provide sort of the maximum insulation that the custodians don't, and legally don't end up with a fiduciary responsibility. This was crucial to getting the good membership. And the first one we set up was actually the people who set it up were 2 Brits and an American. The first election, the majority of custodians are Korean. And so far everybody's behaving very well. The behavior of the custodians has been quite ethical. We're not seeing any signs of collusion. Operationally, ethically, it all seems to be going pretty well. Now their token price hasn't, done great, but that's almost always true if you provide true utility in a token.
I think you mentioned personal data in the beginning of the panel, Facebook, personal data, and it's a little bit related. You gave an excellent tutorial about KYC and blockchain and using data on the blockchain. And have you ever thought about how do you monetize data? Can be personal data or can be KYC data for the banks and basically providing some kind of currency or incentives in such a market?
For the KYC, I think there are basically two types of KYC. One is the individual personal KYC. The other type is the corporate KYC. Think two directions here. For the consumer, individual people, there is a data protection called CDR in Australia. That's short for Consumer Data Rights. So that regulate for the banking industry when when the banks need to release consumers' data to third party or other services, they must get the consumer's consent to govern the whole process of data sharing. This to protect the consumers' privacy and also to let the consumers have more control of their personal data, financial data, and also provide the innovative service for them. Like you can compare a mortgage loan with different banks and different financial services. That's one part. And for the corporate KYC, that's the business model here is not let the first bank who did the time-consuming and expensive work for doing KYC and then share freely with other banks, right? So I guess they're on top of the blockchain technical platform, there should be a kind of service or agreement on the like charge based on the membership or based on the number of transactions for sharing this, how many corporate KYC. So, yeah.
The consumer case. I'll give you an example. Let's say take a small country like Luxembourg. 10 banks, basically they did their KYC, they put the data on the blockchain, they're willing to share. Obviously, you always have, in every environment, one big guy who has most of the clients. What are the incentives for the guy who has most of the clients to basically share the data with potentially its competitors who might grab their clients, they already KYC'd, and how do you deal with this situation where you have, yes, data sharing is good, everybody can decrease the price of doing the KYC, but at the end, you might lose your customers because the other banks will onboard them much faster. How do you do a governance, or how do you incentivize it by other means, banks to play by the game, knowing that in Europe there is now the PSD2 requirements which basically allow banks and kind of pushing them to use this kind of service?
Yeah, I think it's a real challenge. I don't have a good answer to it. I think it requires more collaboration or more way to think what's the real value for improve the customer experience in sharing this KYC to show the real business value.
And then I have a question for both of you. I mean, all three of you, if you're interested. Take the data example of the KYC. So let's assume you have a lot of projects, one KYC project using Hyperledger, the other one using Ethereum, just to name the two of them. And then you want to put them together, because if you just have two islands and some of the banks use the Hyperledger solution while the other ones use the Ethereum or the Quorum, then it's not going to work. So how do you interconnect KYCs done or data sharing done on two different platforms on something that can be used by everybody? Knowing that in one case, Hyperledger, you have not a native coin, so you cannot just monetize something, while in the other case, in Ethereum, you have a kind of native currency that makes data sharing, or at least data monetization, easier.
Right. I'll probably won't speak on the from a technical standpoint, but just to share kind of what's happening in terms of KYC blockchain in South Korea, because of the reason that you mentioned about bigger banks not wanting to share their clients' data or personal data, although it's meant to be decentralized. What has happened in Korea is there are consortiums of banks and of securities companies like financial institutions, and rather than focusing on actual data sharing, they normally start with authentication. In Korea, it's by law required for every financial institutions to ask for their client to upload their certificates, which initiates the authentication process. And the government, so this is a very old 20-plus-year-old old-school RSA-based authentication, and the government actually wants to strip away from this system. So one of the new technology that, one of the alternative options for this old-school service was the blockchain technology. So right now, there's an organization called Korea Financial Investment Association, which is a self-regulatory organization that governs all financial institutions in Korea. So KOFIA plus 26 securities firms formed a private blockchain network, and they have implemented and introduced a new service, new authentication, PKI-based authentication service called Chain ID, and it's being used by Korean citizens. On the other side, the banking institutions also, with Samsung, created a private blockchain network that is based off of Hyperledger Fabric. Right now, there's a government grant project to interconnect these two private blockchain. One that is built with our technology, which is called Loopchain, and then the other consortium, which is created based on Hyperledger Fabric. So there are a lot of government-supported, government-promoted standardization efforts of interconnecting heterogeneous blockchain networks in Korea. And I'm sure from an IBM's perspective, there's probably a lot of internal efforts to standardize interoperability protocols between different chains.
Yeah, so the interledger protocols have been developed to allow the exchange of the values across multiple blockchain platform, which makes sense because in many different kinds of the blockchain platform, which would be difficult to integrate it into the one. So that rather than making a single big blockchain platform, there are smaller blockchain networks that should be connected to each other. That's a concept. And regarding the KYC and personal information, it may not be, right things to do just to integrate the data into the blockchain by using the interledger protocol type of things because of the user consent issues and the protection of the data, may be challenging and so on. But another interesting trend I see in outside of the blockchain world is to do kind of transfer learning type of the technology to learn about the to make the analytics model for personal data in one set of the data in say one continent, and then make another analytics model in another set of the data in the other continent, and combine them together to make a new analytics model and so on. So that there, I think, the different level of the integration. So, by the way, speaking of the personal data, our personal data is already monetized by like social media companies.
Yeah, but not by us. I mean, we don't get anything. We are just
yeah, exactly. I think the blockchain can be used to change the game to reward back the owner of the personal information for providing their personal information. I read an article recently about some companies started a new service for the tokenized service for the genomic information. So if you register genomic information, you get tokens that you can be used for the other kind of service and so on. So that kind of the new ways of their monetizing personal information to and give that value back to the owner, maybe a new.
In your case about getting your data, putting your data, and getting some currency, if you take things like basically GDPR in Europe, which you might at the given time moment give your data to someone, you get some currency, but later on you might decide that this data needs to be deleted. How do you enforce such a policy when obviously blockchain are meant to be transparent, public, and the data should be there? How are you going to do this with these kind of requirements, which are GDPR compliance?
Yeah. So it's a very difficult problem. Only focusing on single blockchain network, right? So we don't have a very clear answer. There is also a discussion about whether hash value can be counted as a personal information or not. So the common practice we encourage is not to store any raw personal information on the blockchain. If you hash, add a salt or something to randomize and keep that salt as the secret that never discovered, right? Something like that. But still it's a kind of workaround, and deletability of the value on the blockchain is
From a regulatory point of view, even a hash, if it's computed from personal data, it's considered personal data.
Yeah. Right.
So
right. Because if it's a hash value, you can do a kind of dictionary attack type of things to discover, do the matching of the, hash value versus the original data. That's why I say the adding salt to make the hash value unpredictable is important. But this salt now becomes a new secret value which should never be disclosed to the, appropriate parties. But yeah, so.
Coming back to the interconnection of ledgers, so you mentioned your technology. How good are the results? Anyway, so you mentioned that you mentioned you have your own technology to connect the blockchains. So can you comment on your, or from all four of you, on the experiments in trying to interconnect different type of blockchains? Let's start with Christian.
Yeah, so we have projects where it's basically trying to interconnecting things like Hyperledger Fabric with Ethereum. The way that, for the simple reason that we use the private blockchain to generate invoices, for example, and then Ethereum using it to actually get the money. I have to admit, I don't really know exactly how the interconnection is done. Maybe Santari knows it.
I mean, positive experience or negative experience on interconnecting the ledgers?
From our company perspective, we're still in the proof of concept stage. We've successfully, transacted transacted between homogeneous blockchains, which are based on our loop chain technologies. We're in the process of trying, right now, a lot of the interoperability use cases that in Korea that is used by enterprises. For example, there's a savings bank that started implementing private blockchains internally within their group and branch offices to authenticate users. They're now being connected to public blockchain to timestamp these authentication. Right now, for the actual commercialization of these interconnections, the company is still relying on Relayer to relay these private blockchain transactions into a public chain. But hopefully what we're developing at this point is allowing these heterogeneous blockchains to communicate on a protocol layer and protocol level. So, still a lot of development is required. If any of you are kind of interested to learn more about how we approach interoperability, I'll be more than happy to, share materials and speak to you after the panel, but, since the time.
I think interoperability is very important for blockchain become mainstream adoption. For example, for supply chain, you have different blockchain networks to manage the supply chain logistics. Then you have another blockchain for managing the trade finance. Then other multiple blockchain for the KYC. They all actually need to talk to each other and also need to provide the proof, provide the trust, and without relying on, again, a third party or the intermediary. But there are lots of research questions and challenges in this topic that we'll continue to address it.
Interoperability is very important and difficult. It's not just about the protocol only, but also the data model and so on. So that this growing attention to the interledger protocol things is makes sense to me along with the emergence of the token economy, because the tokens are the relatively simple representation of the value on blockchain, which is easier to exchange across the multiple blockchain networks. So that I think it really makes sense. But there are many attempts to do the interledger protocol or atomic swap across the blockchain network. But in my opinion, they are still lacking the concrete guarantee on the safety, because things like that, hash time lock depends on the assumption that the both blockchain networks believes in the same clock, right? So that that guaranteeing the atomicity of the interledger or cross-chain swap is still, I think, the technical challenge that we should be addressing.
Having said that, I would really like to thank all the panelists and also to you to actively participate in the panel.